Welcome to the Independent Advisors Podcast, where we dive into the world of stocks, tradable markets, and financial planning with Jessup Wealth Management's Chief Investment Officer, Mark McEvely, and CEO, Matt Jessup. You'll hear tips, tricks, and strategies to address your financial well-being and, most importantly, conveyed in a way that everyone can understand. Here are your hosts, Mark and Matt.
Hey everyone, welcome to episode 284 of the Independent Advisors Podcast, where Matt Jessup and I, Mark McEvely, bring you everything you need to know from the past week in the world of financial markets and financial planning. This week we are deviating from our normal schedule of events to host Alfonso De Pablo as our guest. Alfonso is a CMT and technical analyst with AllStar Charts, and if you've been listening to the podcast for any amount of time, you should be somewhat familiar with us sharing his work quite often. So, Alfonso, thanks for joining us, and welcome to the podcast.
Hey guys, thank you for having me on the podcast. I'm very excited.
Yeah, and first of all, congrats on getting your CMT designation last April. It's a very big accomplishment. I'm sure you're happy to have all that studying behind you.
Thank you very much. Thank you very much. Yeah, I'm very happy. It was a great journey learning about technical analysis. That's my passion. So I'm very glad I cleared the three levels, and now I am CMT.
Yeah, that's awesome. Well, we'll give you a little break here, grab a sip of coffee, or I don't know what time it is where you are in the world right now, but we're just going to quickly run through the month-to-date and year-to-date performance of the major market indices that we track for listeners. And obviously, month-to-date and year-to-date is the same for January. So this data is from YCharts and as of the market close on January 15th. S&P 500 index up 1.2% for the year. The Dow Jones Industrial Average up 1.6% for the year. The NASDAQ Composite Index up 1%. The Russell 2000 Small Cap Index up 1.4% for the year. And the Vanguard All World ex United States ETF up 0.2% for the year. 3-month Treasury rate sitting at 4.35%, the 2-year Treasury rate at 4.27%, and the 10-year Treasury rate at 4.66%. Really quick before we hop into our conversation with Alfonso, we are starting to see market volatility pick up a little bit. We did communicate our feelings on this topic in recent episodes, but I would just, continue to expect more of this type of market activity as the year goes on, in our opinion, especially over the next several weeks with us kicking off earnings season earlier this week. And speaking of that, the banks, got earnings season started this quarter with them being the first to report earlier this week. And so far, so good. So, banks and financials reacted quite positively to the earnings of JP Morgan, Citigroup, Goldman Sachs, BNY Mellon, some of the other major banks that reported. So with that behind us, Alfonso, will hop into our conversation. And I know Matt wants to kick it off with a little bit of background about you.
Thanks, Mark. So Alfonso, obviously we consider you a close friend of the podcast and enjoy reading your content you consistently produce. Let's start off by having you tell our listeners and viewers your professional journey up until this point in your career.
Yeah, well, thank you again for having me in the podcast. And well, regardless of my professional journey, it began in Venezuela. I'm from Venezuela. I'm 27. I started to get interested in the financial markets back in 2018 when I was in college. And I started to develop my passion on technical analysis after college, and over the years I have honed my skills and eventually joined AllStar Charts team, JC Estrasa, almost 4 years ago, and it has been an amazing experience, like a professional and learning experience for me. And at AllStar Charts I specialize analyzing both US and international stocks. writing actionable insights reports for different type of clients, including portfolio managers, financial advisors, traders, investors. And it's been a very exciting and fulfilling journey in my early career, I would say. And working hand in hand with Steve and JC, it's been amazing for me.
Yeah, we've had JC on the podcast before, and he's an awesome guy, and it was one of the most favorite podcasts that we've ever done. But when you were talking about being in college in 2018, Alfonso, I must say, usually in these types of conversations, I have been like the young guy in the room. So I'm 30. I graduated college in 2016. So
Okay.
it's a little jarring for me to be talking to someone younger than me that's successful in our industry. I'm just not used to that, and it makes me feel very old. So
I love that. That's hilarious.
But so as a CMT, which we mentioned you just passed last year, obviously you rely mostly on technical analysis. So how has the field of technical analysis evolved recently with new technologies and data sources seemingly coming out every other month, and now with AI? What are some emerging tools or methodologies that you find particularly effective that help you in your day-to-day job?
Well, I mean, yeah, technology rising, it's a big theme. It helps us to be more efficient at the end of the day, especially to collecting data, I will say. Not doing the like manually or by itself, but helping with more data resources, new apps, new software application that we use on daily basis. So I think for what we do, it's helping us the most, I will say, in that kind of thing. Regardless of like the methodologies or like the approach we use, as technicians, we analyze the behavior of the market. I mean, we do it by ourselves, of course. And at AllStar Charts, we have a top-down approach. It's basically like assembling like an universal puzzle. We look at stocks, bonds, commodities, the forex markets to understand the broader environment before narrowing our focus on sectors, industry groups, and ultimately individual stocks with favorable risk-reward profiles. So I will say that in my day-to-day, what we'll do is a lot of charts, bunch of charts, as you know, if you know JC. That's what we do here to collect the data, looking at charts and looking at this data from price.
Yeah, and as much technology and AI is going to influence our industry in the future, there's nothing that replaces sitting down and flipping through 1,000 charts in a few days, right? That's where you find, or at least for technicians, in my opinion, that's where you find and uncover opportunities. It's just putting in the time and the work to flip through all these charts and look for opportunities, right?
Exactly. Well said. Couldn't agree more.
Alfonso, as we move into 2025 and obviously look ahead to 2026, what are some of the specific technical indicators or sectors, asset classes you're closely monitoring? And are there any patterns or trends you're anticipating that you believe will significantly influence market behavior during these periods?
And feel free to share charts and kind of talk through them, Alfonso. And for our listeners, if you want to see these charts while Alfonso's talking through them, obviously head over to the YouTube channel and you'll be able to see everything there. But we'll also try to include these charts in our show notes. But highly recommend watching on YouTube to really see what Alfonso's describing and talking about here.
Yeah, so, well, regardless on your question, and the most important indicator I monitor and I look every day is price. Basically, because it's the foundation of what I do. Everything comes to price pays. and price are, is fact at the end of the day. But you mentioned what kind of patterns we could see in 2025. I want to take a step back and go back to 2023. 2023 was the year of bearish to bullish reversal patterns and the start of new uptrends. 2024, last year, was the year of failed tops. Every time that the market was in a sideways trend and the market threatened to break down, buyers stepped in and buy the dip. So we saw multiple times this pattern to fail and continue their upward path, basically. And in 2025, I'm looking at these patterns to see if they finally, break down or they continue in the same path as 2024. Those are the patterns I'm seeing. I'm focusing on 2025. And for example, you have semiconductors on a relative basis forming potential top information. I don't have the chart here, but SMH on a relative basis is carving out like a potential top. So those are the kind of patterns I'm seeing to see if they resolve lower, as they, the textbook says, or they just hold their ranges and keep grinding higher. For example, another kind of pattern, similar patterns are in European ETFs. When you look at the VGK or developed markets EFA, and you look at the price and compare the price action to 2021, you will see a similar topping pattern, a similar distribution pattern. So I'm looking at these ranges, at this consolidation, to see if they complete to the downside or if they continue to act as last year, and resolve higher and not being a top information.
Yeah, and like an example that you have that's on the screen right now for listeners is the Dow, and obviously that 42,000 level looks to be pretty important from a support standpoint. And we've had a couple of times where we've tried to break down through that level, but buyers have stepped in, and most recently just this week with that nice bullish engulfing candle that we're seeing, hopefully that lasts throughout the week. So this is a great example of something that you were just talking about. To dive a little bit deeper on this, Alfonso, you had a research post back in January of 2024. So this is a year back from now, that was titled 4 Charts Worth Watching, where you highlighted the significance of semiconductors, home builders, broker dealers, and the industrial sector as indicators of market health. Number one, a couple of questions in here.
Yeah.
Do you find all of these 4 different areas still relevant? And if so, why these particular sectors? Because they did a good job of predicting what the market would do in 2024. So I think it'd be interesting if we could take a look and see what these charts are showing for 2025.
Yeah. First of all, I completely agree with those charts and those industry groups. Semiconductors and home builders are economically sensitive risk on groups. So when they perform well, it is a strong indicator that the market is unlikely to fall apart. I mean, if they are in a good shape, the overall market is okay. I mean, investors are embracing risk, basically. Industrials, on the other hand, it's probably the most diversified sector, and I like to refer them to like the generals of these sectors. Again, it is the same. You don't want to see industrials to fall apart. Wouldn't be healthy for the market. And for financials, I mean, whether you take broker dealers, I like to take banks. In the financial sectors, I think they are a big group to watch this year too. If you look at let me see if I found the chart at KBE. For me, this is the level to watch for banks. We're right now below overhead supply. We're trying to hook in higher. The line in the sun for me is 61. So this one is a big one for this year. But again, semiconductors, back to the chart, it is stuck in a range. It is stuck in a range. You don't want to see semiconductors get back below 207. If that happens, the bull market is over. In short, I mean, I know we're in the middle of that range, but if we see that happen, the bull market is over. This is the most important sector in the world. This is the poster child group of this bull market. Nvidia, the AI revolution, all that stuff, it's coming from these companies. Also, another group within tech that I would like to give a special mention is software. I mean, you don't want to see software ETF, IGV break back below the former highs from 2021. So these charts, I mean, in the technology space, semiconductor software make the most important group of stocks in the world. And when we look at consumer discretionary, you don't want to see XLY get back below the prior cycle highs. So right now we just pulled back. Buyers stepped in at a key former resistance level, now turn it into support. And you don't want to see that. We are seeing right now a lot of failed moves in both directions. We're seeing failed breakouts, failed breakdowns. So right now we're like in a messy market. For example, I see a lot of like pessimism out there. A lot of people telling the bull market it's kind of close to the end, but a friendly reminder that we can have a correction or a severe correction if we don't see an expansion on the list of new lows. So this is a chart that compares the like the actual new lows list for 1 month, 3 months, 6 months, and 12 months compared to other cycles, to the COVID crash and the 2021, 2022 bear markets. So far we haven't seen like an expansion, like a clear and meaningful expansion in new lows. So this is a chart that I will be watching closely this year too. So just to just to understand how to position ourselves. So far, I will prefer looking for stocks to buy rather than for looking for stocks to sell. Yeah, and doing like a complementary work with different charts and different like indicator like breadth and these leader groups, as you mentioned, semiconductors, software, home builders, industrials, and banks. I think it will tell us where we're headed.
Yeah, and I think this is part of what I really like about what you guys do over at AllStar Charts is you keep it pretty simple, right? And not saying that it's easy, but it's relatively simple to understand. And just the fact that you need to have a new expansion and new lows to get a significant leg downwards in the market. We haven't seen that yet, right? So obviously we've seen that kind of on a shorter term basis with 1 month lows expanding a little bit and 3-month lows maybe a tiny bit, but not really much movement in 6-month lows and 12-month lows. And for the market to have a significant long-term downtrend, you need to see stocks making new lows. So, and we're just not seeing that, which again, to me and to any outsider looking in on the financial markets, I think that that's relatively simple to understand.
Exactly, and we will see. I mean, if we eventually see an expansion in the lows, you will starting to see those failed tops from 2024 that I recently mentioned to complete to the downside and not holding the ranges. So that's what I'm trying to put the same logic in the same idea.
Alfonso, I have a follow-up question. I know you had some posts on AllStar Charts about the mainstream financial news media, kind of the quote-unquote headlines, are often designed to distract investors, and citing instances where rumors led to significant market reactions. With our viewership, how can investors differentiate between noise and substantive information? And, what strategies do you recommend for maintaining focus amid market rumors?
Yeah, that's a good question. That's a funny question. I don't watch to the news. I don't pay attention to the news. At least the mainstream media, definitely not. I think, I mean, they do a good job getting clicks and headlines, but most of them are like scary ones, right? So, if it is like hurricane season, everyone will turn the TV and look at the news to see when the hurricane is coming, right? Or what is going on. But when the weather is perfect and sunny, nobody cares about the weather news. So I don't pay attention to the news. I pay attention to the data of the market price and trying to maintain my objectivity and follow the data at the end of the day.
Well said, Alfonso. It's interesting because I know we have similar viewpoints on this, Mark and I. And when we are talking to our clients and they ask us those types of questions and we respond in a similar manner, for some clients, I think it is such a foreign concept of, well, how can you stay on top of the markets and not hear what the financial news media is saying? And that's when we usually have a similar response. So I know I'll let Mark speak for himself. It's refreshing to hear that from others, such as an individual holding their CMT designation. Mark?
Yeah, it's just, it's data-driven decisions. It's not, trying to follow, professional, famous, I guess you could say, hedge fund managers or money managers, because you could have a year like 2024 and, some of those guys had really terrible years, right? So if you followed what they were doing, then you probably wouldn't have had a great 2024. And similarly, there were several times that, that we pointed out on the show in 24 where people were calling for the end of the market, not even the end of the market, but the end of the world as we know it, right? And if people are following that, obviously that's not a good thing. So we have always prided ourselves on making data-driven decisions and not news-driven decisions. And especially with a year like 2024, right, where you have a highly contested presidential election, and you have people on both sides of the aisle saying that the market's gonna, go nuts if someone wins, or the market's gonna fall apart if the other person wins. So we like to really just keep that stuff out of client portfolios and just focus on what the data is telling us. So, Alfonso, thank you for taking some time out of your day to join us. We really appreciate it. If listeners want to follow you or more of your work, where should they go?
Well, thank you for having me again. It was a good time. Hopefully, I will be back and continue to talk to you guys about markets. And you can follow me on Twitter. I'm at AllStar Charts on the Twitter, and you can also sign up to my daily notes. I recently started to write a note every day. The stockmarkettv.com. So I'm publishing all my posts on the site, and on Twitter. I'm also on Twitter, so you will find more about me there.
Great. Well, thank you so much. Enjoy the rest of your day. And thanks everyone for listening to episode number 284 of the Independent Advisors podcast. We will be back with you next week for episode 285.
Thank you for listening to the Independent Advisors Podcast. If you're interested in hearing more, hit the subscribe button so you can be notified every time a new episode gets released. Feel free to share with friends, family, and follow us on Twitter at Jessup Wealth, Facebook, and LinkedIn. Mark and Matt will continue to share beneficial information on these social media sites. Also, check out the podcast tab on their website. That's www.jessupwealthmanagement.com. There you'll find links to every episode of the Independent Advisors. Have questions or topics you want to discuss on the show? Message us on Twitter, LinkedIn, or send an email with the words questions and topics in the subject line to inquiries@jessupwealthmanagement.com. We'll talk about it right here on the podcast. Certain sections of this commentary may contain forward-looking statements based on reasonable expectations, estimates, projections, and assumptions. Forward-looking statements are not guarantees of future performance and involve certain risks and uncertainties which are difficult to predict. All indices are unmanaged and are not available for direct investment by the public. Past performance is not indicative of future results. This podcast is provided for general informational purposes only and does not constitute either tax, legal, or financial advice. Although we do go to great lengths to make sure our information is accurate and useful, we recommend you consult a tax preparer, professional tax advisor, financial advisor, or lawyer regarding your specific circumstances. Investing involves risk, including the loss of principal. No strategy can guarantee any objective or goal will be achieved.